Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with the analysis of the gold market. So yesterday, if you remember, we talked about some doubts that we have concerning the possible upward continuation. This market was showing not really absolutely bullish performance yesterday, and since we were expecting the pullback on other markets such as euro currency, Great British pounds, market stands on the resistance. It indirectly should make impact on gold as well through the strength of the United States dollar. Besides, we're coming to the Fed meeting on next Wednesday, and actually markets probably will start preparation to it because the 75 basis points move that is widely expected is actually only the half of the story. The second half is what a Fed will tell about the conditions, about further steps, what they intend to do, and there we could get some more bearish, or let's call it as bearish for the gold, but from the Fed point of view, this will be hawkish surprises. And with anticipating of that, you can see that speculators start taking the short position, as they were taking the long position before the European Central Bank meeting, for example, in the euro currency. So you can see gold is turning down, and from that standpoint, the probability to appearing of the butterfly pattern, something that sort is rising, as you can see. So what does it mean? It means on the lower time frame, we have not quite bullish performance. Initially, I thought that maybe we did not have this spike on the future market. In this case, we could treat this as just a move into the neckline. That is just the starting of the right arm, not the completion. But I have checked the futures prices, and yes, they also have the spikes, and from that standpoint, it means that the hand shoulders actually stands in place. I mean, right arm. So it means that this type of the performance right there is not absolutely bullish, and it contradicts to idea of the hand and shoulders, because this is bullish reversal pattern. In the second part of the pattern, should not be any strong bearish action, because bulls turns to the extension. Bulls should accelerate the upward action. Here we do not see it, and this is really big bad thing for gold market in the short term. Technically, if we'll take a look at the hourly chart where our major trading plan stands, what we have. So currently probably you do not have any positions, because if you have taken it yesterday on the confluence, indeed, and here we have not bad action, but probably you're out on the break-even already. So gold was not able to show the perfect bullish combination. We said yes, we could accept minor retracement to the confluence from the neckline, but then market has to keep going higher. But this option now is lost, and market is dropping lower. Technically, the last acceptable level that we could consider as a more or less acceptable retracement depth, although it's already not very good, but still okay. Let's it be. So we will consider. This is 1650 level, as I said. This is actually the edge and a vital level for the bulls. If market will break it down, so we should forget about hand shoulders and be prepared for taking out of these lows. Currently, as you can see, we have another bad things. So market shows acceleration to the confluence. Despite here we have strong support, which is actually ABCD XLP agreement, and kind of the ABCD pattern might be formed as well. So it means that the 1647, 1651, this will be vital area for the gold right there. And maybe even some pullback here could happen from this level, but this not good sign, and it's really suggested that well, chances on the breakout stand significant. So that's why currently, if you're a scalp trader trading on the 5-minute chart, yes, you could consider taking scalp long position with the pullback somewhere back to the 1660 area, getting the 10-15 bucks per contract on intraday trading. This is acceptable. But if you intend to trade on the daily and suggesting, or even on the fall time frame chart, suggesting that it should be reversal to the upside, here's really tricky moment. And currently I wouldn't take in long position by far, despite that we're coming to the vital area, despite we're coming to the strong support. If you decide to do this, if you decide to buy, trying to take this risk, well, try to move stops to the break-even as soon as possible. So at first bounce up from this level, just move stops to the break-even. So initial stop probably makes sense to place somewhere below the OP target of this ABCD pattern. So that's actually what we have. But gold becomes weaker, and chances are gradually, bullish chances are gradually housing by performance that we see currently.